Xanthi. I'm gonna teach you how to figure out cash to accrue for sales. Are you guys excited? All right, so sales. So sales equals your total cash. So handout 5. Handout 5 discusses cash to accrue. That annoying sentence of it's you record it when earned, not when collected. So back to my lovely diagrams that I like to make. So sales equals your total cash receipts received plus your individual net for accounts receivable for the homework, and then for unearned revenue. But for your homework purposes, we don't have, for handout 5, we don't have unearned, but I'll still discuss it. That's a nice guy and I am. But for accounts receivable, your net is flipped reversely. So you go ending accounts receivable minus beginning accounts receivable. Why might you ask? The process of doing this shows how much your accounts receivable has increased. Thus, the amount that you have earned but not collected. Oh, but over here, your net becomes beginning minus ending, because your beginning unearned revenue minus your ending shows how much of your unearned revenue that you have finally fulfilled an obligation for, that more of it is being recognized as revenue. Because you all know unearned revenue is unearned, but only earned when liability is fulfilled. So, beginning minus ending. Alright, next question. Next part. Alright. Okay, we move on to purchases. So purchases, how do we find it? Total cash payment to vendors plus your accounts payable net of ending minus beginning. This shows how much cash you have dished out to lower your accounts payable. General formula is total cash outflow or inflow plus net plus another net. Some cases we have only one net we talk about, some cases we got two. For example, in your midterm, you guys are going to have unearned revenue to deal with. But so far in handout 5, you don't got to deal with it. So we'll leave that for another day. We'll talk about that later. But this is another diagram I've created. So we'll first talk about these three, and then we'll move on to the other two. So generally, if you notice, we're dealing with all cash outflows over here. So this one's cash receipts of, cash outflows or inflows. So this is your cash receipts of inflow, total payments to vendors outflow, and payments to employees outflow again. Up here, you're dealing with your accounts receivable, so you're showing the ending balance minus your beginning to show how much your accounts receivable has increased or decreased. While over here, your accounts payable to vendors, you do the same thing to determine if it's increasing or decreasing. The same thing for salaries expense. For cash, you want to get your total cash payments from receipts from customers plus beginning cash minus total cash payments. That is the little information box that is given on handout 5. You add that up at the bottom and bam, you got that number, and you get that cash. Supplies is, you can basically use the cost of goods sold formula to solve this one. So I tried making it uniform, but you can just deal with this setup. Beginning plus purchase cost of goods available minus ending equals cost of goods sold or used for supplies purposes. So we got this one goes over here, this one goes over here, this one goes over here, and bam, you get your supplies. All right. So my lovely suggestion is to make this into like some flashcard. Just memorize it, because this is the structure you're going to need to know for cash to accrual. So now we go to actually solving the problem. Be back with you shortly. It's always good to take breaks, you know, so just kick back, relax a little bit, but not too much. So welcome back. I didn't think this one through, so I decided to write it on the board, but realized it's too low now, so just the camera angle, and here we are. Alright, let's get started. Alright, so we start with income statement. So I hope you guys took a screenshot. Just fast forward, rewind a little bit, and you can go back a little bit and get a screenshot of the formula sheet that I put at the beginning of the video, because I'm a nice person. All right, so we start off with sales of 67,300 plus, remember the net I was talking about, of ending of 5,900 minus beginning of 4,200. Which is 69,000. Even. Right? And then we get beginning. Now we move on to beginning of 5,600 purchases is the next net that we got to solve. So purchases of 30,000 plus that other net that I was talking about of ending of 7,000 minus 6,100, which is 31,500. You guys with me on this one so far? All right. So, and that gives us cost of goods available, which is, add that up, 37,100. Less ending of 6,300, giving us a cost of goods sold of 30,800. That reduces our gross profit, giving us a total amount of 38,200 of gross profit. But wait, there's more. We got a whole lot more. So we got two more nets to deal with. So we got your operation expenses and salaries, which has salaries expense, supplies expense. And then I promise you we're done with the nets for a little bit. So we get 15,000 given of total cash payment plus another net of ending of 900 minus beginning of 500, giving us 15,900. Final supplies. Remember, this is the one that's a little bit tricky. We go purchases of 2,500 plus a net of, yeah, correct, beginning minus ending. Giving us what amount? 3,600. Yep, 3,600. All right. Depreciation expense. Depreciation expense, you get your equipment price minus salvage value divided by useful life equals, bam, depreciation expense. And that is a whopping 1,200. Other expenses, other additional expenses is also given of 5,500, giving us a total expense of 26,200. Income tax, income before income tax, also known as EBIT, is 12,000. With a 25% tax percentage, 12,000 times 25% is, yep, 3,000. Giving us a net profit of $9,000. You just created an income statement. Hey! Are you paying attention? We continue. Cash. Cash is, remember, total payments received of 67,300. Given info plus beginning of 2,700 minus total cash payments of $62,100, giving us 7,900. Accounts receivable 5,900. These are just, now you're just filling in now. At the bottom it gives you other information. Those are your ending amounts. So we get supplies of 1,000. Inventory. This is the inventory of 6,300. Now we deal with the depreciation. So you want to come, you shimmy over to the left right here, and you write the amount of 12,000 of equipment less accumulated depreciation. So we're somewhere in the middle of the useful life of this equipment. So you have a contra asset account accumulating depreciation. Okay, so imagine if this is the accounting equation. All right. Contra asset account is right there. All right. Now, We're at an eraser shortage. All right, let's erase this. So that gives us 6,000, giving total equipment price of 6,000. Giving a total asset of 27,100. And that's just basic accounting. You just add all of these accounts, all five of the accounts up. So salaries payable. Oh my bad. Accounts payable. This is another given information of 7,000. Salaries payable 900. Income tax payable, which we solved in the past, of 3,000 because it's 25%. Giving us a total liability of 10,900. Alrighty, we're almost done. Just had a little technical issues. We are back. Alright, so we gotta talk about the stockholders' equity portion. Common stock, given information, 7,000. Retained earnings. How do you find that? You got beginning plus net income minus dividends equals the amount of 9,200. And you get 16,200 of stockholders' equity. And once you add these two up, the 16,200 and the 10,900, you get, bam, 27,100. Magic. Congratulations. You have finished cash to accrual balance sheet. Mic drop. Bam. Done. Alright. See you on the next video. I hope you found this helpful. And down below, I will set a link. So again, really nice. I'm setting a link down there so you can go and download an Excel template I've created, and I was in 350, of how to do cash to accrual. It's a different page to page, and there's a little hidden gem inside that worksheet for you guys to find, to help you out with your overs and unders. Alright, you guys better ace this exam because it's been a lot of work on my end to do these. Alright, good luck. You know, it's extremely hard talking to a damn camera, you know that? It's extremely hard talking to an empty camera. An Excel PowerPoint. Yeah, Excel PowerPoint. There's such a thing as Excel PowerPoint. Alright, okay, we're gonna this in the file. We're gonna get these purchases down right now. Okay. Proud sponsored by Pepsi, paying me the big bucks. Find it. So purchases. All right, this is the accounting equation. Are we in frame? Break time. So just relax a little bit. How do we get it? So, get what? Alright. That shows how much cash you have dished out to lawyer. Up at the bottom, and bam, you got that number. You guys better get an A. This is, let me show you what time it is. It's currently 1:30 on a Thursday night.